Hey there! In a modern life, you are able to sell almost everything. So, for example, in 1975, a guy called Gary Dell has decided to sell rocks as pets, and they called him Pet Rocks. They had a beautiful package, and there was a beautiful oval rock inside, and the idea was pretty simple. If you use rock as a pet, you don't need to feed them, groom them, or clean after them. The idea was bright and initially it was booming because they look so cute. But at the end, after a year, this business became unprofitable. So let's dive in and try to understand how to build up a business plan that will drive you profit. Whenever we are speaking about a business plan, we usually are describing one of three main approaches. Either we're speaking about the research or the data analysis or counting profits and losses. So within the research, we usually speak about company name, locations, the general business idea, and I'm assuming if you're watching this video, you already have something in mind. When we are speaking about the data research, we analyze competition, we do an analysis over our strengths and weaknesses, or we are speaking about the value proposition, and this is what I'm not be speaking about, because you as a business owner know it's better. What I will be speaking about is to help to calculate profit, and if a profit actually means a successful business. In reality, if you can already understand, a sales profit is not equal successful business. And this is why across accountants and finances, they came up to an idea about having a metric that can allow you to analyze a business, which is called EBT, or earnings before taxes. This approach allows you to sum up all of your income within your business, deduct all the losses, and to get a final understanding what the final outcome will be. So to do this, we'll have a small exercise now. We will assume that you are a business owner who is willing to resell some goods, and two different offers came to you. First is an offer to sell apples. They're giving you apples to buy for 1, but the market price is 120, so it actually means that you will, with every apple sold, you will have a 20% profit. Another side, it's a software company that is asking you to marketize their software, which costs 50, which actual market price is 55. So your actual profit will be but exactly 10%. So let's do some calculations and see how it actually lands in profit and loss paper. So let's assume we will be very successful and we will sell a total for 1 million in net sales. If we sell for 1 million, we need to pay back to the guys who are providing us with initial source. So in case of Apple, we need to pay 833,000, and in case of software, we need to have a little bit more than 900,000 back to the vendor, or to the owner, or to the producer. So this means, as we discussed, actually a profit of 20 and 10% accordingly. But as we were successful and we overachieved our sales target, vendors are pretty generous and gave us a 10,000 in bonuses because we dramatically increased the amount of sales they will be doing. Unfortunately, we did some cross-border sales, and this led us to a currency conversion loss of 2,500. But we also have invested in marketing, a total of 20,000, but we earned back within services. Some restaurants asked us for peeled apples, and in case of software, somebody asked us for software installation and maintenance. So if we calculate it all together, we'll get a total gross profit of 174,000 in case of Apple and 98,000 in case of software. Apple business looks pretty profitable still, right? But to make this calculation concrete and exact, we need to add operational expenses. So those are the ones that calculates all your costs connected with the sales of particular goods. So as we already discovered, we sold 1 million, we received a total gross profit of 174.88K accordingly. But to sell apples, you need to hire people, because there's physical goods. You need to have at least 2 guys in store who will be moving around and selling to your customers. And with an average salary of 60K per year, it will give us 120K for the sales. In case of software, which is fully digitally driven, we'll have a cost around 60K for building up a website for the software sales and maintaining all the customer operation for one person. Additionally, we need somebody to administer all the costs, and we assume is that in both cases it will be around 20K. But apples requires that those should be moved from point A to point B. Yeah, so we need to deliver apples, we need to have some storage for them, and we need to spend around 40K just for the logistics. In case of software, we did some services, so we need to pay for the Uber when we're coming to the customer, and it will have only 3K in logistics costs. So at the end, we'll have a EBT, or earnings before taxes, in case of Apple, minus 5, almost 6K. That will lead that with every year we will be doing this business will be unprofitable and will continue to lose money. But in case of software sales, nevertheless, the profit was twice as less. We're still able to earn 15K a year with such low profit approach. So to wrap up, we need to understand that margin or the general profit is not enough. Gross profit is also not enough to calculate the final outcome. And to understand the business efficiency, we need to calculate our outgoing EBT. So if you consider this information valuable, hit like button and press the subscribe button. And we'll get back to you more on financial and communication topics.